And it is now my great honor to introduce the President-elect of the United States of America, Joe Biden.
It's a rigged race. Some of the voting is rigged. Rigged.
Trump has been dethroned. Joe Biden is going to be the 46th president of the USA. And needless to say, he has some work to do. Real GDP growth in the US has fallen by an astounding 31.4% in the second quarter of 2020. These numbers haven't been seen since the Great Depression. Unemployment has spiked to its highest rate in the post-World War II era. And the leisure, hospitality and airline industries haven't yet recovered from the pandemic. Before we get into Biden's economic plan, let's look at Donald Trump and Joe Biden's economic ideologies. Donald Trump is a classic Republican. He believes in a free market economy with lower taxes, which basically reduces government spending and government expenditure, whereas Joe Biden believes in increasing taxes, thus increasing government revenue and increasing government expenditure. The US government approved a massive $2 trillion relief package, which is the largest of its kind. What this stimulus did, though, was mask the effect of the pandemic on the US economy. The US economy is primarily driven by consumer spending. When consumers spend, companies make profit and everybody is happy. What will be really interesting to see is once these relief packages stop, how much will the average American be willing to spend, given that the government isn't funding their daily expenditure anymore. But Joe Biden has voiced support for another robust relief measure, which would be approximately $1.5 trillion. Joe Biden is your average Democrat. He believes in government spending, and that is the entire point of Build Back Better. According to Mark Zandi, the chief economist at Moody's Analytics, Joe Biden's proposals to go big on government investment will get the US economy back to employment faster. His policies are targeted to help the low and middle income household. Biden is proposing spending $7.3 trillion in over 10 years. This money will be used to upgrading the nation's roads, highways, bridges, providing tuition-free community college, ensuring access to affordable childcare, providing aid for Americans to buy or rent homes, building a clean energy economy, amongst other things. What's interesting is Donald Trump believed in decreasing the overall tax rate, especially the corporate tax cuts. His argument was that the money saved here could be used in the economy by these private companies and individuals in a far more efficient way than government spending. Joe Biden, on the other hand, plans to raise taxes by about $4 trillion over the next decade. He also wants to increase the corporate tax rate from 21% to 28%. And he wants to tax capital gains and dividends at ordinary rates for incomes above $1 million. What these new taxes will do is hurt business profits and discourage some investment, ultimately damping economic growth. However, the effect on business activities should be negligible. All these taxes affect the high-income households, who can easily tap into their savings and investments to maintain their spending.
Yani, teen guna lagandega.
Biden will probably have a looser policy on H-1B visas for high-skilled foreign workers. What this will do is boost the population and labor supply, increasing consumer spending, productivity, and economic growth. Although Biden has taken a tough stance on trade with China, he is expected to remove some of the tariffs, perhaps the most recent wave of tariffs that would eliminate a tax on American shoppers who buy Chinese imports, ultimately bolstering consumer spending. While we all know Trump would have certainly de-escalated the trade war. The oil and gas sector could face some difficulties because Biden is an environmentalist and he has said that he'll roll back much of Trump's cuts to regulations, especially the environmental changes for the auto and power industries. And as he ramps up a plan to address climate change and promote clean energy. These new regulations are likely to discourage some business investment and hiring. Biden supports a proposal to raise the federal minimum wage from $7.25 an hour to $15. Now, the economic impact of this is very mixed. About 30 million people, mostly from the low-income households, they would really benefit from this higher pay. It would also increase their spending power. But higher labor costs for businesses means either they hire fewer people or they pass this cost to the consumers, making things more expensive, hurting consumption. Some businesses may choose to replace these workers with technology. Ultimately, a base pay increase to $15 would have little negative impact if it occurs gradually and follows market trends.